Welcome to the CLIX podcast series. Today, we are discussing the future of DeFi credit and the launch of the CLIX loan marketplace.
Yeah, thanks for having me. It's definitely a pivotal time to be having this conversation.
It really is. We have a lot to cover today for you listening. We will look at how the platform moved from concept to testnet, why the market opportunity is significant, and how the rollout strategy is actually being shaped.
Right, and also what makes CLIX different from traditional banks, fintechs, and, well, other DeFi projects out there.
Exactly. And usually when we talk about getting a personal loan, there's this expectation of a very rigid, almost top-down process, right? You gather a mountain of paperwork, you go to a massive bank, and then you just sort of wait for them to pass judgment.
Yeah, you're either approved or denied, and you rarely get to see the math behind the curtain.
Right. But what if that entire dynamic is about to be flipped completely on its head? What if the future of personal loans isn't dictated by a traditional bank at all, but by a global, transparent marketplace built on decentralized finance?
And that's really the core vision of CLIX. We're looking at fundamentally rewiring how credit flows globally. We want to move away from those closed-door bank decisions and build open person-to-person networks.
Which is such a fascinating shift, because you're attempting to create a completely new credit infrastructure rather than just trying to replace banks. You're bridging this massive gap between traditional banking and DeFi.
Yes, and doing it without the usual crypto speculation. That's a huge distinction for us.
I'm really glad you brought that up right away, because when a lot of people hear DeFi, they immediately think of, volatile meme coins or massive crypto hype.
Right, and we are explicitly avoiding that. This isn't about speculation at all. It's about real-world utility, using decentralized rails to solve a very old human problem, which is simple access to capital.
Let's begin with the sheer scale of that problem. Before we look at how CLIX actually works mechanically, we really need to establish why it needs to exist. I was looking at the origin story and the market analysis, and the numbers of underserved borrowers they're staggering.
They really are. When you look at the global landscape, traditional banking leaves a massive portion of the world outside the credit economy.
Let me just list some of these figures for context. We are looking at global remittance flows of $850 billion. The market for unsecured consumer credit is $10 trillion.
Yep.
Then there are underbanked markets representing $170 billion and another $25 billion in adjacent sectors. Wait, hold on. We see these trillion-dollar numbers thrown around a lot. Are these just theoretical numbers, or is this a tangible gap that CLIX can actually capture?
No, those are very real numbers, representing massive everyday friction for real people. Let's look at why traditional banks ignore these populations. Legacy banks run on decades-old technology.
Like mainframe batch processing.
Exactly. Mainframes, rigid risk assessment models like your standard FICO score. Yeah. Because their overhead is so incredibly high, it essentially costs a traditional bank the same amount of money to underwrite a $500 loan as it does a $50,000 loan.
Yeah. Wow, really? So the margins on small loans just aren't worth it for them?
They're not worth their time at all. So they only focus on the absolute safest, most established tier of the market. If you're a gig worker or part of a diaspora community or living in an emerging market, you just don't fit their narrow algorithm.
So if you don't have that highly specific credit score, you're just invisible, even if you're a perfectly reliable person who pays all your bills.
Completely invisible. And let's look at that $850 billion in global remittances you mentioned.
Yeah.
That is real money being sent by real people across borders.
Yeah.
Usually it's a worker in one country sending portions of their paycheck back home. Right now, legacy systems take a massive cut of that in exchange fees.
And wire charges, right. Plus it takes days to settle.
Exactly. The people actively moving this capital are being overcharged and completely underserved. So our vision at CLIX isn't to tear down traditional banks. We are building a new parallel credit infrastructure strictly for real consumer lending.
Which brings us to the really crucial question. Let's move to how you actually pull this off. If you search the App Store right now for loans, you'll be scrolling for days. How does CLIX stand out from traditional banks, fintechs, and other DeFi projects?
Well, we like to divide the current landscape into three distinct buckets. First, you have your traditional banks. They own the capital. They have the deep pockets and the regulatory licenses.
Right.
Second, you have the fintech companies. Fintechs own the customer experience. They make the apps look pretty. They make onboarding super fast.
But mechanically, they're often just a nice-looking front door for a traditional bank, right?
Yeah.
The core plumbing hasn't actually changed.
Exactly. It's just a smoother interface. Then you have the third bucket, which is DeFi. DeFi owns transparency and efficiency. It moves money at the speed of the internet, completely person to person.
No middlemen taking a cut.
Right. But historically, DeFi has a terrible customer experience. It's highly technical, incredibly volatile, and operates with almost zero regulatory compliance. So what CLIX is doing is positioning itself right at the intersection of all three of those buckets.
So you want the deep liquidity of a bank, the smooth customer experience of a fintech, and the transparent rails of DeFi.
That's the goal. And to achieve that safely, we formed a major partnership with BitGo.
Let's look at that partnership because it seems critical. BitGo is providing your digital asset infrastructure, custody, stablecoin rails, KYC onboarding, which is know your customer, and MiCU compliance support.
Yes.
Plus, you are bringing in AI-powered credit assessment to manage the person-to-person lending mechanics. Let's break some of this down for the listener. First, the AI credit assessment. How does an AI evaluate a borrower differently than a bank does?
Think of a traditional credit score like a distant banker who only looks at a rigid spreadsheet of your credit card payments. If that spreadsheet is blank, they deny you.
Even if you have money coming in.
Right. Our AI credit assessment is more like a local village shopkeeper who knows your character based on daily interactions. The AI analyzes alternative data points.
Like what kind of data points?
It looks at your mobile phone top-up history. It looks at the consistency of the remittances you send home, utility bill payments. It synthesizes all these alternative behavioral data points to build a highly reliable risk profile.
Oh, wow. So it's evaluating your actual financial behavior, not just your formal borrowing history.
Exactly. It gives credit access to people who have a proven track record of financial responsibility, even if they don't have a legacy credit score.
That makes a lot of sense. But I want to pivot to the BitGo partnership because I have to push back a little here. We established that DeFi is supposed to be this frictionless, borderless environment.
Sure.
So partnering with BitGo to enforce strict KYC identity checks and heavy MiCU compliance, doesn't that kill the very efficiency that makes DeFi attractive in the first place?
I get that question a lot. On the surface, it seems contradictory. But in reality, compliance is the mechanism that actually unlocks scale for us. It's a superpower.
How so?
We have to remember who we're serving. If you're borrowing money to start a small business or sending money to your family, you don't want the volatility of the crypto Wild West. You want absolute security. By using BitGo for institutional-grade custody and stablecoin rails, we remove the terrifying volatility.
Let's explain those stablecoin rails really quickly.
No.
A stablecoin is a digital asset pegged to a stable fiat currency like the US dollar. So if someone takes out a loan for $500 on CLIX, the stablecoin ensures the value stays flat.
Exactly. You don't have to worry about your loan suddenly doubling overnight just because a random token crashed. Price stability is mandatory for real-world consumer credit.
And what about the regulatory piece? MiCU. That stands for the Markets in Crypto Assets Regulation, which is the European Union's framework.
Right. By ensuring MiCU compliant support from day one, we are sending a massive signal to institutional capital. Big pools of money like pension funds or family offices, they will not touch a completely anonymous person-to-person platform.
The legal risk is just way too high for them.
Way too high. So by enforcing KYC and MiCU compliance, we create a legally secure environment. The heavy regulation is actually what convinces the big financial engines to supply the capital in the first place.
Okay, I see the vision now. The speed of DeFi, but with the legal certainty of traditional finance. Let's move to the actual timeline of building this engine. Conceptualizing this is one thing, but building it is another.
It's a massive undertaking.
Right, so development was happening throughout 2024 and 2025. Then the CLIX TestNet development started in September 2025, and you just completed the TestNet MVP on February 1st, 2026. What matters here is, what does that MVP actually prove?
Well, MVP stands for Minimum Viable Product. A testnet is a simulated environment where we run the software using fake assets before any real money is at risk.
To make sure it doesn't break.
Exactly. Getting this hybrid engine to work is a massive engineering challenge. We have to ensure that the AI credit algorithms communicate perfectly with the smart contracts. We have to ensure the BitGo stablecoin routing executes flawlessly.
And that the KYC data is processed securely.
Right, without violating any privacy laws. So, completing the TestNet MVP on February 1st, 2026 means we've proven the core architecture actually functions together. We have working code.
That's a huge milestone. And currently, you are in the IDO and fundraising stage. For you listening, an IDO is an initial to X offering, which allows projects to raise capital directly on a decentralized exchange.
It perfectly aligns with our ethos of bringing the community in.
But here's the timeline crunch. You just finished the testnet in February, and you have a target launch date for the live production marketplace of November 1st, 2026. Is a 9-month window really realistic for scaling a global financial platform?
It's aggressive, for sure. But look at the methodical pacing that preceded it. This is a stark contrast to typical crypto projects that hype up a launch in a few weeks and promise to build the software later,
The hype first, build later model.
which almost always fails. We spent years laying the foundational plumbing. The long runway from 2024 all the way to late 2026 shows our commitment to building real infrastructure.
So because you already proved the mechanics in the testnet, these 9 months are basically just stress testing.
Exactly. It's about intense security audits of the smart contracts and scaling the server infrastructure to handle global volume. We are putting engineering ahead of marketing.
Which is exactly what you want when dealing with people's credit. So with that target launch date of November 1st, 2026 set, let's look at the rollout strategy. Where does this platform actually go live first? You can't just launch globally overnight.
No, you absolutely cannot. The regulatory barriers vary wildly, so we've designed a highly specific, phased rollout strategy.
Let's walk through that map. Phase 1 begins in Europe. Specifically, you're targeting Germany, Spain, and the Baltic region.
Yes.
Then Phase 2 is a growth market strategy focused heavily on Southeast Asia. You're looking at Indonesia, the Philippines, Thailand, Vietnam, and Malaysia, while utilizing Singapore as a strategic secondary market and hub.
That's the plan.
And this geography perfectly aligns with your market opportunity around diaspora or community lending based on remittance flows. It's a classic barbell strategy.
Mechanically, it's brilliant for what we're trying to achieve.
But I want to challenge that logic for a second. On one end, you're starting in highly regulated, mature European markets. On the other end, you're expanding to fast-growing populations in Southeast Asia. If the problem of underserved borrowers is most acute in Southeast Asia right now, why take this detour through Germany and Spain first?
It all comes down to how trust is built in global finance. Think of Europe as our ultimate regulatory stress test. We talked about MiCA compliance earlier, right?
Right, the European framework.
The European Union has some of the strictest financial oversight and consumer protection laws on the planet. If we launch directly in an emerging market, institutional lenders might hesitate.
Because they aren't sure if the platform's security is truly robust.
Precisely. But if we prove that our platform handles KYC securely, manages stablecoin custody flawlessly, and facilitates person-to-person lending legally under the scrutiny of German and Spanish regulators, we basically earn a global stamp of approval.
Oh, I see. You prove the technology is bulletproof first.
Exactly. Once that regulatory foundation is battle-tested in Europe, our growth market strategy for Southeast Asia becomes vastly safer. We arrive in those markets with a proven institutional-grade product.
And that barbell strategy actually connects beautifully when you think about the remittance corridors, because a huge percentage of the people sending money home to places like the Philippines or Vietnam are working overseas in places exactly like Europe.
You've hit the nail on the head. Imagine a nurse working in Spain. They can seamlessly interact with the CLIX platform under European regulations. They can participate in community lending or send stablecoins that directly benefit their family back in Southeast Asia.
And the platform connects them instantly, bypassing those legacy banks that used to take such a massive cut.
Exactly. And then Singapore acts as the perfect, highly regulated hub to anchor our operations on the Asian side. We're building a secure bridge from both sides simultaneously.
When you map it out like that, the timeline looks incredibly cohesive. From the quiet development in 2024 to the testnet in early 2026, the European launch on November 1st, 2026, and then building toward 2027 to 2028 when this Southeast Asian expansion really hits its stride.
It's an ambitious roadmap, but the logic behind the pacing is extremely solid.
So as we wrap up this conversation, I'd love to know, what is the core message listeners should take away from all of this?
The main takeaway is that the future of finance has to be accessible, it has to be global, and it must be built around empowering people rather than institutions. We're taking the hard, highly regulated road of utilizing the best parts of DeFi, the instant settlement, the transparency, while maintaining the strict real-world compliance that everyday people need to feel secure.
That is a powerful vision, and it leaves me with a final, somewhat provocative thought for you listening today. If platforms like CLIX succeed in turning global remittance flows in diaspora communities into a transparent, person-to-person credit infrastructure, how long until our traditional localized credit scores become completely obsolete?
That's a great question.
Right. Could we be looking at a near future where your ability to get a loan isn't based on a rigid three-digit number from a legacy credit bureau, but rather on a borderless, on-chain financial reputation that you carry with you anywhere in the world? It's definitely something to ponder as this technology evolves. Thanks for listening to the CLIX podcast. If you enjoyed this episode, be sure to subscribe and follow us for future conversations exploring the future of finance, technology, business, and innovation. Please also share this episode with others who may be interested in learning about the future direction of personal credit. To learn more, visit the CLIX website. Direct lending, global reach, less friction. The information discussed in this podcast is provided for educational and informational purposes only. CLIX and its affiliated entities do not provide licensed financial advice in global markets through this podcast. Any views expressed are those of the individual speakers and may not reflect the views of CLIX as an organization. Financial products, lending solutions, digital assets, regulations, and market conditions vary significantly between jurisdictions. Listeners should conduct their own due diligence and seek advice from appropriately licensed professionals within their own jurisdiction before making any financial or investment decisions. Always consult a qualified professional before making important decisions. We'll see you in the next episode.